Next article, guys, here are some tips for home buyers to save on costs with newly built homes. I actually agree with a lot of these things, but then I actually have some hesitation, some input to maybe put on the table for you guys to tell me, wager whether it's a good idea or not. So the general idea here is that you can keep the cost of buying a brand new build down by passing on some of the upgrades they could be doing along the way before they hand you your keys and hand over the home. Now, I understand that, and the difference could be that, maybe it's $5,000 or $10,000 versus $50,000 or $60,000 or $80,000. So there's a big variety of cost potential savings. The thing that I wanted to put to you guys is, what would you recommend that to your buyer to wait to do the upgrades they want later when it might not be warrantable as it would be if the builder does it? Yeah. So if the builder does the work, usually it comes with a warranty for a certain number of years or months that if they have to come back and repair things, it's covered under that. If you wait till later to do those things and you spend $20,000 out of pocket, well, then that contractor would have to give you some sort of warranty, or the product they use has some kind of warranty. So what do you guys kind of make of this general idea?
I mean, for me, I think it just depends on everybody's circumstances, right? Like for me, when I bought my new home, I want to throw everything in there. Why not finance it? The rate's going to be like 4.25%. I'd rather finance that 4.25% than use my own money. Mm-hmm. If I had it specially invested in other investment vehicles, which is the norm. And that way, the way I look at it is, hey, that's a tax write-off for me. All the interest I'm paying into my mortgage is a tax write-off. So I look at it like that. Mm-hmm. But not every buyer's going to look at it in that sense. They're going to look at it like, well, why is it going to cost me $20,000 when I can actually get somebody else to do it for $10,000?
Yeah. Yeah.
And so those are kind of like you got to identify who you are, where you want to be at, and what fits your budget.
Yeah.
So
we did a couple of shows ago. We actually had someone put a comment in because we were talking about new builds and all that. Yeah. And someone actually put the comment in that they actually had to go and retract and go scrape back their deposit because the builder wasn't doing the upgrades. And they were making a comment in our feed about how we actually had a situation where we had to walk away from our dream home. We had put our deposit down, put our other house on the market, and there was this whole story connected to it. And they actually had to come and claw back their deposit, cancel the deal because the builder actually wasn't acting in good faith. And they were able to get their deposit back because of that.
Gotcha.
So there was a builder that they had trusted to do that. This is kind of why I'm asking the question. They had trusted to do that. That particular builder, it was in a different state, didn't do the work they were supposed to, and because they didn't act in good faith, this person who commented was able to get their money back.
Wow. That's awesome. Good job.
There may potentially be a risk in that because this is one person's story, but they're probably not, they can't be the only one in the country.
It depends where you're at. We're in San Diego. There's so many builders. Right? And they're so protected here that if it's not going their way, they can just get that earnest money deposit because we have certain contingency timelines and see, and I'll go somewhere else, Mm-hmm. But I do put all my upgrades in there. I'd rather go into a home being turnkey.
Mm-hmm. Yeah.
Mm-hmm. Than having to worry about hey, I have to put this now, it's new, then I have to add that. I'd rather just go in it.
Yeah. I mean, especially if you're not questioning the builders, their intent, that they're actually going to do it and they're going to follow through and they're going to do it at good quality workmanship and craftsmanship.
It's kind of like going into that brand new car, right? Like you go in there and it's like, it smells so good.
Straight out of the factory.
And then you get to pick the paints. You go to I like that. Yeah. I don't know. I'm cool with that. But again, what's important is that the value has to come in.
Well,
because if the value does not come in and you over added these upgrades, well, then you have to pay the difference.
Yeah. Yeah. And I think you brought up a good point. It comes down to the situation because also kind of when you buy a new car, there's different kits, there's different trims, and that also comes at a premium if you want the nicest one, right? So I think also if you want to finance everything, you also got to make sure that you can afford it on the debt to income ratio. Mm-hmm. So I think it really comes down to your situation. Some people could be like you said, hey, I have a family member that could do this for, the cost of the material and some beers. Yeah. So it really just depends for the person if they want to do it themselves. Some people are like DIYs. They like to do it themselves regardless, Other people are like, hey, I work all day. I don't even got time to be in my backyard. So, I want to just come and make it look all good already. Yeah. So I think that's a really good valid point that you said. It really comes down to the situation.
No joke. Before I came in today, guys, I had to actually call a friend of mine. I'm like, hey, so I got this kind of situation. I don't know what to do. So I'm going to call you because I know you know what to do. Oh, no, it's super easy. You can just do it like this. I was like, no. I called you because I cannot do it. I already know I cannot do it. It's easy for you, which is why I'm calling you. So I'm not that DIYer for a lot of things. I am for some, but not for what I called about today. I was like, no. I need someone else to come fix this.
Personally, myself, I'd be I know enough people that I could kind of influence them to come over and work on my house, and we can kind of work something out.
Yeah.
And, you know,
I like saying I'd rather have it done right rather than done twice.
I'm definitely not a DIYer. I can't even build something with instructions. So.
Better done right than done twice. So to your point about the kind of maybe having choices memo and Brian DIY, you know, this report says almost half, 46% of homeowners use cash from savings to cover renovations.
That's what I thought was crazy.
And you know, that's a lot. 20% use credit card, and 7% refinance an existing loan. 5% use home equity line of credit.
That's what I thought was
the
crazy. Is 5% only use their equity, and you would think like, hey, that's I could just wrap it in, have a low rate, but people don't see it like that, and it's crazy because it's like I'd rather go fork out this money than put more into my house. When if you do the math, getting a regular loan on that is going to be literally even more or slightly the same.
Yeah, exactly.
But at least you get a lower rate and you could have more benefits and being able to.
And I think it's highly situational, right? I mean, someone's sitting on a fat stack of cash and it's only $20,000. They're like, well, maybe that $20,000 dent is not worth me taking a HELOC out for.
Yeah, exactly. Well, here, I want to give you guys a scenario right now. And this is not a new home purchase, but it's the client that wants to put substantial amount of money down. Right. Mm-hmm. And you guys know when we ask for all the documentation, we ask for like everything except for your DNA. Right. But we're getting everything because we want to analyze their current financial situation. We want to see what they're doing and what we can how we can just guide them through this process. So he's like, yeah, you know what? I have my retirement and I can take X amount of money to put a big chunk of a down payment on my house. Right. Yeah. So I'm like, okay, well, let's see if that's going to make the proper sense. Well, I look at his statement. He's making like 14% return on his money. Oh. Right. And he's got 253,000 there. So I'm like, well, why take 50 or 100,000 when your mortgage is going to be 6.5? There's no need for that. Yeah. If you have that money already tied at 14%, that's going to help you really make some of that mortgage payment instead of depleting your savings. Mm-hmm. So when he looked at it, he's like, whoa, nobody's ever told me that. Yeah. Right? Yeah. In the past, I purchased my house, I put these out, and I go, no, for me, the way I look at it is you have two investment vehicles. Yeah. Now, you have one at the 7%, then you have the other one at 14%. Let's leverage that both. And he's just like, whoa, bro. And I'm VA, right? I don't have to go in there. There's an officer. He's like, luckily, he's been saving a lot of money into his TSP, and he's just killing it. Wow. So I'm like, good job, because normally when I see those, they're only making like 5-6% return, Well, so real quick, the asterisk disclaimer. Some people are going to go, well, of course, you're the loan guy. You're supposed to say that. So what would the difference have been in the loan? Because, he's going to make more commission if the loan's higher. So what was the difference in the loan? There really isn't much higher. If you put 50,000, it's not that much higher.
That's my point. So my point is I'm getting ahead of this because I already know what's going to happen. People go, of course he's going to sell the higher loan. Well, no. On 50,000, what's 1% of 50,000, guys? $500.
Okay, so if you're paying,
let's say you make 1% on a commission and it's $500. That's the difference. That's not that helpful.
It's not making anyone else richer.
No. I mean, again, you're borrowing at 6.5%. Your interest to your payment. Thank goodness we have that. That's a tax write-off. Mm-hmm. So it's a benefit to somebody who's making good money. Right? So that difference, if you have another investment vehicle or earning 14.6%, I'd rather fund that run.
One. Yeah.
Because the equity here already that I'm making on my house is already
take care of itself.
Let's say 5% conservative on a $1.2 million house. Come on now, guys.
Well, in that scenario, that matches up with what you're talking about here, with what they're talking about, with 46% of these people using cash from savings. Yeah. Well, and you're not talking about savings, of course. It's obviously something that's invested, but it's the equivalent.
Savings when they're making 1%.
Well, it's the equivalent when it comes to defining something as cash. Okay, so if I take money out of a retirement account and I convert it to cash, and then I use that cash to work on my place and renovate it, that's still cash. But 5% using home equity does seem a little low to me. To Brian, to your point, 7% refinancing existing loan, that makes sense. It's super low. Yeah. It's not the right environment to do a full cash out unless you're also paying off debt and you're also got a plan for how to get at a lower rate later, or you're moving in a couple of years. There's something else going on. You're not just doing this one time because you want new bathroom tile. That's probably not the right way to do it.
No.
There have to be other things baked in there together for that to make some, I'd say, mathematical justification.
Yeah. Yeah, and simply what I'm getting with this is your team's going to help you identify these things, whether you're going into a new build, what's going to be the best. So just look at those things. When you're going into a new home build, like look at yourself, like look at your numbers. Do I really want to fork this out at a later time or do I want to just go in there now and put it in there? And we also got to remember 6.5%, that's usually right now to 7% conventional. we got to remember that in another year or so, when rates go down, you're able to refinance, and now that money costs you less.
Yeah. Yeah.
So it's not like we're going to be here for 30 years, because some people will probably say, whoa, if you didn't put that money down, now it's 30 years, calculate that number, da, da, da. But no, that's not the case here. The rates will go down. You could refinance, and now you're actually borrowing that money, for a lot cheaper.
Yeah. Well, last thought for me on this is that, if you are in a new build and you do not have agent representation, you are representing yourself to the builder. So something else, and they don't talk about this in here,
that's
but you
common.
have to be aware of what is the work list, what's the work order, and what change orders need to be made midway or halfway or however long you're in the process you are, because you're basically self-representing if you are an agentless buyer in a new build situation. Just go in knowing that you're going to have to fend for yourself, represent yourself, and you're going to have to make sure with the builder that timelines are being met and certain milestones are being met. On the dates they're supposed to be, and at the quality they're supposed to be done.
Yeah, and read that 50 to 100-page contract, right? You're going to have to read it, because that's usually what it is. And what's crazy is when you put your name on that list and you go, they'd ask you if you're being represented. If you don't put that person there, then that's it. You're representing yourself.
You're on your own.
Or sometimes you do put that, but if that agent isn't there physically, you can't put them.
Sometimes they won't do it. Yeah, you have to be there in person. You can't just slap someone's name on it.
And I wonder why, right?
Well, they don't. Yeah, come on. They don't want to pay a commission to the agent. But in this scenario where someone may be doing those upgrades as part of their purchase, again, here's your choice. You do it with your agent who can represent for you and stand in your defense for certain things or advocate for you or not. And it's your choice. I don't really care. I'm not saying you should have one or the other. I'm saying
no, you should.
I'm just devil's advocate. I'm saying I don't care which one you do. I definitely think you should have an agent. But look, if you don't, just be aware that you're going to fend for yourself and you're going to represent all the different things that need to get done along the way, and that's on you.
So might as well sign up for the DRE and get your license.
Yeah.
Get your license.
Good point.
1,000 new realtors join California real estate month of April.